Welcome back to our channel. In our last video, we went over a brief discussion of each of the 6 essential elements that must be addressed to successfully sell your business. In this video, we do a deep dive into the first one, preparation and planning. If you want to get the highest value for your business in the shortest period of time with the least amount of aggravation, this is where the process starts. Selling a business takes planning and time. Everything else being considered, the more planning that's done, the less time is likely to be required. But before we get started, it's important to remember 2 things as we go through this video. Indeed, as we go through this series. The first is that we want to make it easy for the buyer to buy. We don't want them to work any harder than necessary to give you what is likely to be their life savings. And second, remember that roughly 80% of the businesses that come to market don't sell until the reason they don't sell is corrected. So let's get started. Planning and preparation for selling a business successfully focuses on 4 major categories. First up, cleanup: the physical, the financial, and the operational. Second, accurate documentation: financial statements, tax returns, and other financial records, as well as contracts, leases, legal documents, etc. Third, knowing what your business is likely worth in the marketplace. And fourth, knowing what's next for you. So let's start with number 1, cleanup. Cleanup refers to the business's physical appearance as well as its books and records. Now, with regard to the physical appearance, of course, most of us can understand that an attractive business is likely to attract better suitors than if the joint looks like a junkyard. Unless, of course, it is a junkyard. That's a different story. Is the stockroom or the warehouse orderly? Is it well supplied? Are the offices organized? Is the furniture worn out and ratty? Are the company cars or trucks branded, clean, parked in an organized manner? Does the staff look professional? Does the carpet need cleaning? Does the place need painting? How's the exterior signage? Is your name on the building? Are a couple of the lights in the sign not on, so there's 2 or 3 letters that aren't lit at night? How about the parking lot? Walk through your facility with a buyer's eye. Would you be eager to own this business if your first exposure to it was this visit? Now, as to the second cleanup aspect, financial cleanup starts with the goal of delivering financial documents that are clear, clean, comprehensive, and easy to understand. Again, our objective here is to make it easy for the buyers to buy. If the buyer has to work hard to untangle your financials, they're going to move on to the next opportunity. Remember, with baby boomers heading for the exit, there are thousands of businesses coming on the market over the next 10 years or more. Buyers have many options. Now, we start the financial cleanup with the balance sheet. Remove outdated or obsolete inventory. Get rid of equipment that no longer works or is seldom, if ever, used. If there are loans to or from any of the owners, get them paid, get them collected, or get them forgiven. Write down or sell off uncollectible receivables or other items that have questionable utility to the business's revenue, such as that red Lamborghini that the owner's spouse just had to have. I've linked to a detailed discussion on cleaning up a balance sheet in the description below. Don't miss it. Financial cleanup also involves consolidating financial statements and tax returns. Buyers will compare the 2, and they have to bear some reasonable resemblance to each other if we want to give the buyer any sense of confidence that the numbers and everything else we present to them are reasonably accurate. But buyers refer to much more than financial data. Make sure your employee records are up to date. Prove that all of your tax obligations, all of them, are current. Review all contracts and leases for accuracy and currency. Make sure they're up to date. Locate and organize all bank and financing statements. Get a statement from the authorizing authorities in your jurisdiction that your business is current on its registration and in good standing. In the U.S., this is done with the State Corporation Commission. Other documents that will be needed include the business's organizational or formation documentation, the filings that establishes the business to begin with and document its evolution. In the U.S., for example, this would include articles of organization or articles of incorporation, shareholders or membership agreements, operating agreements, any shareholder, partner, or member resolutions, etc. All such docs should be reviewed to assure they're current and they're organized in a file called maybe corporate governance. You want to make sure that they all represent the current standing of the business, the current condition. Number 2, financials. Accurate financial statements are critical from 2 standpoints. First, the buyer's position is simplicity. We want to make it easy for the buyers to understand the business's financials because we want to make it easy for the buyer to buy. If the numbers are confusing or you have to explain why that $475,000 revenue number shows up in several different categories, a buyer will start looking at everything you provide with suspicion. Clarity is our goal. Some business owners are so obsessive with tracking every nickel that they've developed an income and expense statement that has dozens of different categories, most of which are not needed. We've seen some with lunch expenses and another one with dinner expense categories. While this might be helpful as an internal tracking tool, it does nothing but make the buyer's analysis more complex, more confusing, and more painful. Accurate and clear financials will also make it easy for a broker or a business appraiser when they begin the valuation process. If you've watched our What's My Business Worth video series, you know that financial buyers are buying your business's discretionary earnings. They want to know the answer to the question, what will this business put in my pocket? Determining that number requires a deep analysis of the financial documents and the tax returns to determine what, if any, expense categories include non-essential items, such as the insurance cost for that Lamborghini. We refer to this process as recasting the earnings, and our objective is to identify the benefits of owning your particular business. That's what gives it value. And speaking of which, knowing what your business is worth is arguably the most important aspect of preparing a business, and more importantly, its owner, for a sale. And it must be considered from 2 standpoints. The amount a business owner wants for their business must bear some resemblance to the business's value. Of the many reasons businesses don't sell, an unrealistic price expectation is the main one, and the main one by a long shot. Ask any business owner what their home is worth, and they're pretty likely to have a good idea. They can tell you approximately what their car is worth, their boat, any investment property they own, their stock portfolio, even the likely value of any collection of vintage guitars that they might have. But ask them what their business is worth, their most important and valuable asset. 90% won't have a clue. Price expectation, what the owner expects, has got to be related to the business's value. And that value can be determined, and it will be, by the buyer. A price expectation that is significantly higher than the business's value will doom your effort from the start. Now, needless to say, equally important is to assure that the asking price is not lower than the business's value, which will leave money on the table, though it will certainly increase the chances of a sale, and probably in record time. Now, the second standpoint with which to consider value is to determine what your post-closing plans are and whether the sales proceeds will be enough to realize those plans. You can't put a price on your business based upon what you want to do post-closing. The price you ask must reflect value. Otherwise, your business is guaranteed to be among the 80% that don't sell. And finally, number 4, the big question. Are you ready? Many business owners are not emotionally prepared to exit a condition that can result and will often result in regret and sometimes even depression. Seller regret is real. This is something that personally happened to me when I sold a business back in the 1990s. I was not prepared. You'll be transitioning out of a role that has defined who you are for the past X number of years. Who will you become? Whether it's golfing, sailing, starting another business, or volunteering somewhere, you've got to have something to transition into. Business owners are generally doers. Most have to have a reason to get up in the morning. Think hard about what will get you out of bed once you sell, and then start planning for that. The description below contains two important links that go more deeply into this very important aspect of preparing yourself for the sale of your business. So what's the bottom line here? Well, preparing a business and preparing its owner for the sale of that business is really the foundation on which the rest of the selling process rests. Like the foundation of a house, it has to be built to support the rest of the process, and it has to be built first. While you can try and sell your business yourself, it's important to remember that many buyers these days are professionals, strategic buyers, search firms, private equity groups, family offices. These buyers have far more experience buying businesses than the business owners of the businesses they buy have in selling businesses. You will be on a very unequal playing field and at a distinct disadvantage. But proper planning and thorough preparation are the basis of success in what is almost certainly going to be the most significant financial event of your lifetime. In our next video, we'll discuss the second essential element of this process, the listing and marketing of a business. The need for a marketing plan, the professional marketing tools that we use, how to identify the likely buyers, not the specific buyers, but the category of buyers, the importance of confidentiality and how to maintain it throughout this process. We'll also discuss whether to bring your business to market with or without a price. So don't forget to subscribe so you don't miss that one, or any of the next 5 videos in this Essentials Element series. If you found this video helpful, hit that like button and don't forget to subscribe. And leave a comment or a question. Are you thinking about selling your business? Are you wondering what it's worth or what the process is like? Put a comment in down below and I'll answer every one of them. And finally, thanks for watching. I'll see you in the next video.